Everybody, pillars, as well as your calm doll. To your question on copper, because I think the risk appetite, this market's been slow. The attention, return to tech, inflationary trades, even transports have been a little lethargic. Just because money is attention and money's, and you'll notice a lot of those reflation trend, but they are a little. I am looking for these to move higher, and this is the time where I will be shopping for those opportunities to position myself before the move higher. Remember, if you're an exhaustion trader, if you're waiting for pullbacks, the dip, this is the opportunity. This is the dip. If you're buying with bullish momentum, you're not a dip buyer. There's nothing wrong with that, but be very clear on what your pitch is, what your opportunity is. So thanks for the questions. All right, so moving on. Good morning, everyone. Hey there, Jeffrey. Am I in sector secrets when I'm not in the futures or main room for questions? I'm usually in there for a couple hours every day, Jeffrey. I mean, clearly, for example, I'll be doing the open in the futures room, so I won't be tackling questions in sector secrets, but I'm in there almost every day, usually in the afternoon. But for the most part, yeah, I will be taking questions. But please remember that every Monday from 3 to 4, every single week, we have a Q&A. So tech questions about my indicators, chart setups, etc. We do that every day for an hour on Monday. And then we've been adding in on Wednesday. So that'll be tomorrow, Jeffrey. I'm in the markets in the morning because a lot of you have been wondering, hey, Rog, how do you do some of this ETF day trading on the indices? And we've been doing some options setups in the morning, so you can come join us tomorrow at 9:20. So I've been doing that on Wednesday, so we might keep doing that. So definitely come join us tomorrow. All right, Christian asks, what do I think of biotech companies or the Chinese EV market? Christian, I'll tell you what, I typically don't focus on those. Not that there's anything wrong with them, but I'm not going to give you analysis on things that I don't have skin in the game in, and I do not have skin in the game in those two markets. I think they're interesting markets, and if they're garnering attention, and if you have a specific symbol you want to take a look at, I'm happy to look at it. But I will tell you, for the most part, my sector scanning is going to focus first on the sectors that are heavily weighted within the indices, and then they're going to be the sectors that are going to benefit from the current macroeconomic environment. Housing would be one right now. Energies would be another. So that's where my initial, and I can't say that either one of those right now would be tethered to those two. But again, if I can find double green and a good uptrend, a good healthy trend, I'm game. I'm absolutely game. All right. So next question. Any thoughts on W Day? Sure. Any thoughts on W Day? So if I have a setup on W Day here, let's jump on over here. It really ideally should be benefiting from an overall trend. Look what the overall indices are doing, especially if you're focused on the Dow. And as we see, the S&P and NAS are moving higher. If I have something that's really lagging, I want to know why. I know why oil stocks are lagging. I know why Freeport McMoran are lagging, because the commodities tethered to those narratives and the reflationary trade is just taking a breather. It's not over, it's just taking a breather. It's pulling back. And so then I'm going to ask myself, well, why isn't Workday benefiting from the overall market move? This has been sideways for a really long time. We could probably... I'd say we could probably say we're looking at a potential 1, 2, 3 here, continuation 1, 2, 3. So I'll show you what that looks like. Lower low, swing high, retracement ideally of about 50%. And now we're waiting for that break. Notice how conveniently our two Darvis levels are showing those two recent swing highs. Breaking above that would probably wake this market back up. But that's a big pattern. And it's chop, so it's probably not my favorite. But if you're looking for when the market might wake up, hey, we've seen this pattern before. We've talked about this pattern back in not too long ago, and I did a couple free videos on this. Continuation 1, 2, 3 in. So if you want to know what that looks like, that's what it looks like. Do they launch like this every time? No, because we had one in Qualcomm bottoming 1, 2, 3, took the level out. Now it's retracing, trying to give us our setup. So they're not all blast off signals, but they are signals of a shift in the psychology. So yes, I believe that W-Day has that 1, 2, 3 continuation. So that's a Dow pattern. Just a quick reminder, gang, I love to kick it old school. When I talk about kick it old school, I mean really old school. So let me show you what I'm talking about here. Where is it? There we go. Trying to find that. So this is the Dow theory. Now, Dow came first. I like to tip my hat to, if you like something, find what preceded it. Find the reason and the root of the thing that you like. And oftentimes when it comes to patterns and volume, you're going to end up studying Dow. You're going to end up studying Schabacher. And so while I think Gartley patterns are hugely rooted in this, plus Fibonacci, we have a lot of different patterns. This started with Dow. Find out why Dow liked it. Find out why Dow discovered this was such an important level. And then you can start to understand, say, Wyckoff a little bit better. And you can start to understand all the things that came after it. So this is the pattern. And when you study the pattern, knowing what it is, you know how important volume was to Dow. You know how important psychology, trend shifts and market trends were to Dow. And then you can start to apply maybe a little bit of Fibonacci. Now you're adding some harmonics to it. It's not as complicated as it sounds. But once you understand the root of the thing that you love, and then you can start to layer more on top of it, you're going to have a better understanding of why it works. And a lot of people find something, they don't go to look at what preceded it. So they have no idea that there might be a lot they can learn from the people who actually initially discovered it. So I have assumed that I'm never the first one to plant the flag on the moon. And it has served me very well. We stand on the shoulder of giants. And as long as we remember that, we will get better at what we do, because someone somewhere saw some variation of what you noticed and might have some insights into it that'll speed up your learning curve, speed up your effectiveness. So thanks for the question. Yes, 1, 2, 3. Great eye. Okay, next up is, if you want to join me in the Sector Secrets room, again, tomorrow. So let's say you're thinking, Rog, I'd like to figure out a short-term trade, some options. Come join us tomorrow. We'll be starting off at 9:20. All right, next is, let's see what we have here. A 30-year bond? Sure. And for those of you that have questions about setups from Sector Secrets, I'll answer them in the chat room. All right. This is not where I'll usually answer, specifics about targets and entry zones and whatnot. I'll definitely supplement. We have some long positions that we just built yesterday where I'm looking at different targets. As soon as I have a target, Ashvin, to your question, I'll be more than happy to put it in the room. All right. 30-year bond. I like the 30-year bond, and I think there's an interesting pattern forming that could be very good for gold. This has been something we've been talking about for some time in our premium videos for the futures room, for Simpler Futures. And that is this very narrow 1, 2, 3 that needs to get above this 157 to 158 area to have a reversal. I'm not saying this means we're just moving straight up on the bond chart, but I do mean that it could allow gold to move higher. It could affect the real yields, which is also going to affect gold. And we're sitting right now at a really interesting volume ledge, 2 points of control based on 2 lookbacks. And then we have this Darvis breakout level overhead. But again, I'm looking for this market to break essentially 157.10 to 158.10 before we can make perhaps a 38.2 to 61.8 retracement of the previous move to the downside. So that's what I'm looking at, Bruce, on the bond market, in the bond market. Oh, hey there, Ben. Could I comment on Tesla? after it crosses 700. So 700 is not the number for me. Look at the previous swing highs. That swing high there was 713. The swing high back there was 717. So 700, even though you're right, it is a major psychological level, is not the trigger level. It's not the acceleration level. It's not that reaction level. It's actually these previous swing highs here. So you'll see, yes, we have a 1, 2, 3 continuation pattern forming. And I'd like to see Tesla actually break the swing high from, as you can see right here, March, not even May yet, March 10, which is 717.85. So let's call it 718. That's really, so crossing 700 is nice because we're going to see order flow waiting there, conditional orders, limit orders, stop orders. There will be size at 700. So taking 700 out and remaining above 700 is nice, but the real trigger, the real level that's necessary to break is that, call it at 719 to 720. So hope that makes sense. What do I think of the coin IPO? Should be interesting. I don't play IPOs that early. Remember, IPOs have two major dates that you need to be aware of: the quiet period and the holding period. And usually after that, I'll start getting interested in a longer term view. Before that, you can trade it, So do I think it's going to be huge? Oh, absolutely. Absolutely. Especially with what's been going on with crypto. You have a lot of eyes on that coin IPO. Absolutely. Next up, hey there, Dorothy. Good morning for sharing the live trade. Oh, my pleasure. Yes, if you didn't know it, every other Monday, yesterday we just did it, I do my morning trading live. So we stream from 9:20 to 11:30 every other Monday. I'm with you. And so I'm wondering if you could share how I set up my options orders to move fast into entering trades. Dorothy, I don't have to. In other words, I'm not playing momentum. So if you watched yesterday's video, we were getting long SPY, DIA, and QQQ. I don't have to be so fast. Remember, if you're a momentum player, if you're buying, so what does that mean? If you're buying calls or just buying futures contracts or stock into markets moving higher, you're going to have to work the offer, the ask, and pay up. I don't believe in paying up, and I don't believe in typically using momentum triggers. They are valid. There are times that I will focus on them, but I'll always look for usually what happens, which is even a mild pullback. On the pullback, since momentum and sentiment shifts, now you're going to see time and sales go off at the bid or closer to the bid or splitting the bid offer. This is where understanding order flow and directing your own order flow is so important, even especially for day trading, but even for longer term trading. So I don't have to be fast. No, not at all. I like placing a lot of alerts, but we don't have to be fast, Dorothy. That's the thing. When you're an exhaustive trader, you are literally, you're buying the dip in many ways, and you're letting the market come to you, which is a completely different experience in terms of order execution. So I don't have to be, finger on the mouse, ready to fire, chasing market. No, that stuff just prematurely ages you. I'm 82, and by not momentum trading, I've stayed young. I'm kidding. Not 82. Gonna be 50 though. All right. VJ asks, I suggest you all diversify into, oh, well, thanks. Okay, moving. I really should read the comments before I post them. I don't disagree. Uptrends are great. But crypto is an interesting name. It kind of lines up with coin. What do I think of CMT certifications? Look, I'm a retail at-home trader. I know a lot of people want to go through a regimented, and I know quite a few CMTs. It's not an easy, it's a rigorous process. I'm a series nothing. I have no certifications. I just have been a student of the markets for 3 decades plus. And so I'll tell you what, I'd probably not be able to pass a CMT. So do I think it's a precursor to being a successful trader? I think it's a precursor to understanding what a CMT teaches you, which is technical analysis. But if it's something you want to pursue, I mean, I never have. So it's not something that's important to me. However, I think of the people that I have known who've done it, it was rigorous, and they're very proud of the fact that they went through that process. It's like a PhD in technical analysis. It's an impressive certification. Can I go over the 1, 2, 3? Patrick, I would like it to stay below 21 days. Yeah, so here's what I'll tell you this week, because I know Trish is working on it. And if you check out the Countdown Trader this week, Patrick, to your question there about 1, 2, 3's timing, dates, we have a deep dive into that pattern this week in the Countdown Trader. So I would tell you, Patrick, definitely check out countdowntrader.com, because it's a longer video. It's a more in-depth discussion, longer than I can do here in Charts and Coffee. So definitely check that out. And if you guys haven't gone and signed up for the free newsletter, it is free. You're just going to get different updates from me. When my different indicators and classes are on sale, you'll be the first to know, things like that. And this week, I think we have the Dow one coming. So definitely check that out. AbbVie. So am I looking at some XLV healthcare stocks as XLV is sort of stuck in the mud? Yes, I can't say that AbbVie is tethered to this narrative as much as I'd like to see it tethered. I'll look at things like UNH before I look at AbbVie. I might look at things like Johnson & Johnson even, potentially, before I look at AbbVie. So please be aware that when we're looking at a broader market, the sector, the tide, we want to see boats that are moving with the tide, not boats that are sort of lagging the tide, although there's a good argument here for playing catch up eventually. But let that be the second set of trades you're looking for. Let the first set of trades you're looking for be those trades that are benefiting from being more tethered, more connected, more similar looking in their structure to the sector that they are weighted within. And just like that, gang, I am flat out of time. So some of the questions about earnings in terms of financials, remember the impact on the S&P and the Dow. And as far as notice on any sessions that I do, check out the Simpler Trading YouTube channel for, you can set a reminder. So if you're on the Simpler Trading YouTube channel, there's a bell that you can click, that you can press, and you will get reminders for different sessions. As far as the sessions that I do every other Monday, you'll see on the YouTube channel that I will have posted it beforehand. So you guys can click the bell, set the reminder, and know when different updates are coming out. That being said, right after Charts and Coffee here at the Simpler Trading YouTube channel, we're going to start releasing videos from our training room. So stick around in the YouTube room or come back to it later on, but we're going to be releasing training videos. Now, I know the timing's a little tricky because we're going into the open, but again, really great content. So click that reminder. And then if you can't watch it now, click on that little clock that says watch later, and you can return back to it and check out the great content that we're creating. Thanks as always for being part of our, you guessed it, Charts and Coffee crew. I'm rocking the Viking Valhalla mug today as we go into the open. All right, gang, I'll see you tomorrow. Same time, same station. Be good to each other.